Hey guys, welcome back. Patrick here. So Airbnb is having its big IPO really soon, and I've seen so many different videos talking about it. But what's interesting is that the opinions are completely different. Some people say that it's going to be an amazing investment, and you should definitely jump on it as soon as possible and invest into it. But others say that it's going to be really overpriced, and it's probably going to go down after the IPO. Well, which one is it? Is this going to be a great investment or not? So in this video, I'm going to do a quick review on it. It's going to be a little bit more casual than usual, mostly because everyone already know what they do, so I don't have to go into as much detail. So I'm going to focus more on the fundamentals and the valuation, and then what do I think is going to happen with the share price in the next few weeks and the next few months. Is this going to go up or not? So let's get started now, but as usual, you know the deal. Please like and subscribe. It really helps out. Alright guys, before I get into the review itself, I just have to mention that the shares are going to start trading on December 10th, so very soon, and that's why a lot of people are looking into it right now. Is it going to be a good investment or not? Well, I have to mention that the company has really benefited from the market recovery over the past few months. For those of you not familiar, back in April, they had to raise emergency cash because of the pandemic, and now it was really impacting the business negatively. Well, they raised money at an $18 billion valuation. Now, a couple months later, the valuation has really swelled a lot, right? Now they're going to be IPOing at a $42 billion valuation. So keep that in mind. The company's valuation has exploded over the past few months. So their price target for the shares were between $44 and $50, and now they just increased it to between $56 and $60 per share. So you can expect that there's a lot of demand for this stock, and now they're trying to get as much money as possible. So keep that in mind throughout the review. There's probably going to be a lot of pent-up demand on Thursday for these shares, and now we'll have to figure out, well, is it going to go up from there or actually down? All right, so let's look into the company's fundamentals. And for me, the first thing to look at is there still growth left in the company? Because they are the market leader, and as the company gets bigger and bigger, you can expect that the growth is going to keep slowing down. So in the past, they've been growing at about 30% per year. Well, now you're going to be paying $42 billion for the company, as opposed to a few months ago when it was worth about $18 billion. So you are paying a premium justified by the fact that you anticipate that the company is going to keep growing in the future. So is that going to happen? Well, according to them, the estimate for the serviceable addressable market is 1.5 trillion, which includes 1.2 trillion for short-term stays and 239 billion for experiences. So that is, of course, the travel industry, and we can expect that in the future it is going to recover, probably around 2022, and it's going to grow slowly over time. But that in itself isn't a big problem, because this is the size of the market with their competitors, including the hotels and VRBO and the other companies that are competing with them. But by itself, home sharing is just in its infancy, even though it's starting to gain a lot of momentum, right? But it's still fairly young, and not that many people are still using it. So over time, you can just expect that market to keep growing and growing and growing, and they will get into untapped markets. So this to me is not a big deal, right? The company still have a lot of room to grow. They haven't peaked yet, of course. Traditionally, the company has been growing by about 30% per year, and of course, those are fantastic numbers if you consider the size of the company already. 2019, they generated gross booking value of 38 billion. That's a 29% increase, and then 4.8 billion in revenue, which is a 32% year-over-year increase. Can't really ask for more than that, but is it going to be sustainable in the future? We already know that 2020 and 2021 are kind of scrapped years because of the pandemic. They're more recovery years. Then what we're going to be looking forward to is 2022 and going forward. I think that's when they're going to be actually able to recover from the 2019 where they were at, and then grow from there. So it is going to be a long road ahead, but for people that are patient, this company is really going to grow in the future. There's almost no doubt about it. So next thing we want to look at is during 2019, they generated 222.7 million in net cash, and then 97.3 million in free cash flow. And this is really important, because when you look at the financials, which we will in a minute, right, you're going to see that their bottom line, where it comes to profits and losses, they're not making any profits right now. But that's not a big deal, once again, because they're reinvesting everything in the company to make it bigger and bigger. They want to be the number one, the one giant player in that industry. They want to beat hotels, they want to beat VRBO and their competitors. So for that reason, like, they're reinvesting everything everything in 2019, they made big investments in marketing and also in their technology platform. So eventually, if they can start to crimp down on those expenses, the company is going to be really, really profitable because they have a very good profit margin. In fact, in 2019, as we'll see in a minute, right, they would have been profitable without those big investments. So the next area we want to look at is what kind of growth opportunities are there, because we don't want to invest in a company that is capped already and plateauing, right? We want a company that still has a lot of room to grow. Well, they do. That's the thing, is that they can unlock more hosting, which is a generic term to say that everywhere they are right now, right? Let's say that they're in Chicago, they have 10% market penetration. Well, if they get to 15%, that's going to increase their revenues in that city by 50%. And that's not a huge percentage, right? So the other area is just going to be expanding their global network. The company is through about 220 countries, I believe, but they don't have a lot of presence in a lot of those countries, right? So they're talking about India, China, Latin America, and Southeast Asia. Those are the 4 big markets that they really have to focus on in the future. And you guys know the size of India and China. I mean, that's a huge opportunity for them right there. We'll see if they're able to compete there, because there are already Chinese counterparts that are kind of copying what AirBNB is doing there. But, you know, it's probable that they'll be able to at least increase their market share there from where it is right now. So this is the one page I want you guys to pay attention to, because it goes back to what I was talking about and kind of gives us a glimpse into the future. So from 2017 to 2019, the company increased its revenues by a lot, from $2.5 billion to $4.8 billion. But at the same time, it did increase its expenses by a lot, from 2.6 to $5.3 billion. So it is great that they're reinvesting in the company, but we will have to monitor them closely in the future. Well, this company, right, if they can actually control their expenses, they are going to be very profitable. So if we look at 2019, right, they had a net loss of $674 million as opposed to the $70 million in 2017. So that's a pretty big difference. But if you take off some of the expenses in sales and marketing and you just bring it back to the numbers from 2018, same for product development, right? Their technology platform and their different products, instead of losing $674 million, they would be in the positives. So that's why, like, a lot of people don't really care about the expenses. And I did mention that it's good that they're like funding their growth, but at the same time, in the future, how are they going to handle it? Are they going to squander the money, or are they going to invest it wisely? There are a lot of companies out there. If you think of Apple, Facebook, they have a really, really strong balance sheet, and they get a really big premium from the investors for that, right? Investors are confident in investing in those companies. Meanwhile, there are other companies that just squander all of the money that they generate through bad acquisitions or starting different projects that are unsuccessful. Well, we want to make sure that AirBNB is going to start to crimp down on those expenses, right, as they grow, to generate returns for the shareholders and get that big premium. So that's one of the things that I'm looking at. If we look at the actual quarter by quarter breakdown, you guys can see that September, like the third quarter, is always their strongest quarter. They always generate a positive return in that month. I guess it's the summer period where a lot of people are traveling, but throughout the rest of the year, they're almost always losing money. So it was the same in 2020, even though with the pandemic, right, they still generated a great third quarter. But now we'll have to see going forward, how are they going to be able to do that? Are they going to be able to lower those expenses like they did? Like, look, in 2019, per quarter, they were spending 1.3, 1.4, 1.4, and then 1.1 billion in the first quarter of 2020. Well, now in the second and third quarter, they were able to lower that by 200 to 400 million dollars per quarter. So, and we'll have to see in the future how that translates. But if they can keep that under control and start to generate a lot of profits, which I think they are very well positioned to do, the company is going to have such a huge valuation in the future, much higher than the 42 billion they have right now. Before I wrap up the video and tell you if I think it's a good investment and how I'm going to be playing it, I just want to mention the one risk factor that I do pay attention to and think is very relevant. That is the one aspect that I don't like is the regulations. To me, it's a regulations nightmare, and every single city, state, and country has its own restrictions when it comes to short-term stays. They just do not want people to rent out their home because they think that it competes with hotels, which are more regulated and pay more taxes. So that is the one downside. Right? The one thing that mitigates that problem is that no single city accounts for more than 1.5% of their listings or 2.5% of their revenues. So you have the bigger cities like London, New York, and Paris. That's their top three. Of course, they generate a lot of revenues, but even if they were going to lose one of those cities, they wouldn't be crippled. The platform would still be very successful elsewhere. But you do have to keep in mind, this is a risk. There are other regulations that are negative that I'm not going to talk about in the video just for time's sake, right? But you guys can read about them. This is one of the issues with a company that I don't like, but if we want to invest in it, we have to deal with it. All right, guys, in the close, what do I think about the company? Where do I see it going? And how am I going to be playing it? Well, first of all, let me say that I like the company. I think it has a lot of potential in the future. Right now, they're in a bad year, right? But it will recover. And I do think that we're going to see some nice growth in 2022 and going forward. The travel industry is always going to grow as the population grows and people just like traveling. Plus, this is a new industry. This didn't really exist 10, 20, 30 years ago, right? Home sharing. They literally created this industry from scratch, and now it's just starting to see mass adoption. So over time, this is just going to keep growing. I have absolutely no doubt about it. So the only question is the valuation at $42 billion. To me, it is starting to be stretched a little bit, right? I would have much rather invested in this company at $18 billion than at $42 billion. And the company keeps moving the goalposts in their favor. They know the demand, they know that everyone wants to invest in it, and they will take advantage of that, which there's a good reason for that. Everyone wants to invest in it because the company has so much potential. It was a growth stock that was growing at 30% per year, and in the future, let's face it, it's going to grow again. It might not hit 30% per year, but even if it grows by 15 to 20% with the size of the company already, that's going to be massive gains. So if we look at the market right now, the market is super hot. Everyone is really looking for companies to invest in. So if we look at some of the other IPOs from this year, you guys are going to see they almost all perform very well, but in different ways. You have Snowflake, right, which went up pretty much right away. And look at the big increase over the past several days. I mean, now it's at $390. This company almost doubled. That's what a success story. But then you have other companies like Unity Software that do the platform for mobile games. Well, look at it. This company just constantly went up. So they totally mispriced this one, right? I see a low of $67, and right now it's at $167. So the IPO was completely mispriced on this one. They gained more than 150% since they IPO'd. So then a different type of company, Palantir, look at this one. The chart was completely different. It was flat for a while, and then all of a sudden it kind of became a meme stock, especially on Wall Street Bets, and all of a sudden it almost tripled. Now, completely different story for Asana at 29.02. Well, look at this one. After the IPO, the company actually went down, the share price. But now, because we are in a very hot market, it recovered, it regained everything it had lost, and now it's actually starting to gain momentum, and it's probably going to generate profits over time. So that's what I was telling you guys. I can't predict, like, with accuracy which type of chart we're going to see. Is it going to go down like Asana and then go up? Is it going to be like Palantir, be flat and then go up? Or like Unity and go straight up? But what I can say is that I am very, very confident that over time, the stock will go up. If we're thinking about 6 months from now, it's going to be higher than the IPO price. I can almost guarantee it, even though there's no guarantee in the stock market. And this channel is for entertainment purposes, so don't sue me. So with that said, one last thing, Uber is one of the companies that IPO'd in 2019, and this one did not do well, right? For the first year, this was a flop. They did not generate any return. But with the market we're in, now it's going up. So there's no real indicator that would tell me that it's going to be any different for Airbnb. The company has huge brand name recognition. That's going to play a major role. So the way I'm going to play it, I'm going to be buying a position, right? Especially, I'm going to try to get it very early on Thursday, as soon as possible. I want to get the best share price possible before it goes up. And if it goes down, I'm just going to hold it long term. Absolutely no problem. So guys, I hope you enjoyed the quick review. I know it's a little bit different from usual, but let me know in the comments if you're going to get in on Airbnb and what you think. I'm looking forward to seeing your comments, and I'll see you guys later.